Good evening, everyone, from the city of Riyadh, Saudi Arabia. My name is Rima Al-Mdaris from the Saudi Ministry of Finance, and this is the virtual dialogue on the occasion of the IMF Article 4 consultation report for the Saudi Arabia for the year 2021. Leading our dialogue today, we are delighted to have with us His Excellency the Assistant Minister of Finance for Macro-Fiscal Policies and International Relations, Mr. Abdulaziz Rashid. Also, we have with us Mr. Jihad Azur, the Director of the Middle East and Central Asia Department at the International Monetary Fund. We also have with us His Excellency the Deputy Minister of Finance for International Affairs, Dr. Riyad Al-Khrayef. And finally, we have Mr. Tim Cullen, the Mission Chief to Saudi Arabia at the International Monetary Fund. With that, we will first hear some opening remarks from His Excellency the Assistant Minister, Mr. Abdulaziz Rashid. Thank you very much.
Thank you very much. Let me first thank our respected colleagues in the IMF. The entire MCD team has done a great job, especially when working with us during our presidency of the G20 last year. As the world knows, crises such as those caused by the pandemic require strong, agile, and decisive leadership. Therefore, we thank the Saudi leadership for providing swift and significant responses to the challenges posed by the pandemic in the kingdom. I will focus my remarks on three key issues: COVID response, short-term priorities to sustain the recovery, and finally, our structural reforms under Vision 2030 to achieve greater economic diversification. The IMF strongly endorsed our plan, stating that we responded quickly and decisively to the COVID-19 crisis. Strict health mitigation measures and the vaccination program has advanced well in recent months. Fiscal, financial, and employment support programs introduced by the government and the central bank, SAMA, helped cushion the impact of the pandemic on businesses and Saudi workers. The IMF also acknowledged the significant benefits derived from Vision 2030 by stating that reforms under Vision 2030 have played a key role in helping the economy navigate the pandemic. In light of this, the statement highlighted the progress made by I'timad platform in strengthening government financial management. Such reforms contributed in enhancing digital transformation in government and financial services and reinforcing the role of fiscal policies and the financial sector. In addition, the statement commended the impressive pace of equity and debt market reforms taken by the Saudi Capital Market Authority and the National Debt Management Center, which contributed in increasing capital raising options for companies and investment opportunities. The statement commended Saudi authorities for the well-capitalized and liquid financial sector, as well as SAMA's efforts in regulating and supervising the financial sector, including private sector support programs during the crisis, which have contributed in enhancing financial stability. The government has actively used fiscal and monetary policy space to cushion the economic downturn in the non-oil private sector. At the same time, the government has prudently adjusted spending to enhance its efficiency and redirect it toward crisis-related spending. Accordingly, the Saudi non-oil GDP contraction is considered one of the lowest relative to the top 5 G20 countries. We also acknowledge the upward revision to the IMF's non-oil GDP growth forecast for 2021 to 4.3%. We are also proud of all our programs aimed at female Saudis delivering fruitful results, with participation target rate for 2030 being met by Q4 of 2020, where the figure hit 33.2%, a significant increase on Q4 2016, where it was 19.3%. We remain committed to the Fiscal Sustainability Program, which represents the main anchor for fiscal policy targets and guides the implementation of our structural reforms. It contributed to a reduction in the level of budget deficit as proportion of GDP from 15.8% in 2015 to 4.5% in 2019. It also diversified and developed revenue schemes to more than doubling non-oil revenues from 166 billion riyals in 2015 to 369 billion Saudi riyals in 2020. The Spending Efficiency Authority and government projects contributed to the savings in costs in capital and operating expenses amounting to 428 billion Saudi riyals. It also triggers a set of institutional and public financial management reforms, enhancing efficiency and discipline in fiscal planning and execution. This is based on a strong program of continued commitment to Vision 2030 aims and objectives, including the Shareek program and privatization program. We are also very pleased with the continued development of the private sector. We are committed to the transformation of our economy and society and remain as determined as ever to deliver on our plans and programs under Vision 2030, which has been tried and tested and acknowledged and endorsed as critical to the kingdom's future prosperity. Thank you very much.
Thank you very much, Your Excellency. And now we will turn to Mr. Jihad Azur, the Director of the Middle East and the Central Asia Department at the International Monetary Fund, who is also sharing with us his remarks today.
We have just published our 2021 economic report for Saudi Arabia. This report is the outcome of discussions between IMF staff and the representatives of the government, private sector, and other stakeholders in Saudi Arabia. Let me provide you with some highlights of the report. The report finds that the Saudi government responded quickly and decisively to the COVID crisis. Important economic support programs were introduced in March and April 2020. Together with reform implemented before the pandemic struck, these programs cushioned the impact of the pandemic on households and businesses. The recovery in the non-oil economy is underway, but it is still at an early stage, and not all sectors have yet fully recovered from the effect of the pandemic. A key message of the report, therefore, is that the withdrawal of remaining COVID-related policy support should take place only gradually to ensure that the ongoing recovery continues. Indeed, one of the suggestions in the report is that more could be spent on transfers to low-income households this year to boost their income and consumption. The report finds that many important economic reforms have been implemented over the past 5 years under Vision 2030. These have resulted in a big increase of participation of Saudi women in the economy, the introduction of the value-added tax and the Citizens Account Program, and increased bank lending to small and medium-sized enterprises. Such reforms need to continue if the economy is to successfully diversify away from oil. In the report, IMF staff suggest additional reforms are needed in a number of areas. Let me highlight 3 of these. First, fiscal reforms should aim to reduce the size of government budget deficit over the next few years to better prepare for a future when oil demand may be lower than it is now. This will need to involve government in both raising additional revenues and curtailing its spending. 2, reforms to increase the role of women in the economy should continue, as should reforms to allow expatriate workers to more easily move between jobs. 3, reforms to boost investment should focus on improving the environment for private businesses by further easing government regulations and strengthening the legal environment. Direct public support involvement to develop new sectors should be carefully managed to ensure there is room for private sector to grow.
Thank you very much, Mr. Jihad. And now I believe we will turn to our respected guests, Dr. Riyadh Al-Khrayef and Mr. Tim Cullen. Thank you very much for being with us today. And Dr. Riyadh, I believe we'll start with you. To begin, there was a swift response by the kingdom to the impact of the COVID-19 pandemic, which contributed significantly to crisis containment. And this was actually reflected in the IMF report. How do you see Saudi Arabia's efforts in this regard?
Thank you very much. Saudi Arabia entered the COVID-19 crisis from a position of strength. Compared to other countries, Saudi Arabia has adequate policy buffers and fiscal space. When you look at the size of the response of the Saudi government, it has been large. When it comes to the fiscal response, it is larger than G20 emerging market average. Also, when it comes to the monetary policy and liquidity response, it has been sizable. Interest rate, the repo rate from SAMA has been cut by more around 150 basis points. This is way larger than the average of the G20 countries. Also, the additional liquidity injection in the system has been greater than the G20 emerging market average. So overall, Saudi Arabia public sector has provided enough firepower to support the recovery. Now, looking at the response or the economic performance, we see expected strong recovery this year and the year after, driven by a swift and targeted COVID-19 response, both at the healthcare sector and the private sector.
Very well, thank you very much, Dr. Riyad. Mr. Tim, we will turn to you. As Dr. Riyad has mentioned, the report was optimistic about the Saudi government's reaction to the COVID-19 pandemic. From your view, however, is the government's response adequate to help the Saudi economy in overcoming the crisis, or are there any further steps that needs to be taken?
Thank you very much, Rina, and thank you, Dr. Riyad, as well. So, as you said, I think the report looked at the policy response to the crisis and found it was a very good response. I think if you go back and you look at the period March, April, when the COVID was really beginning to get quite severe globally. Saudi announced a number of measures, including tax and fee deferrals, the standard scheme to support employment, SAMA's programs with the banks to expand lending and defer payment. And I think that these were really important in terms of providing help both to businesses and to households at the peak of the crisis, when from a health perspective, clearly a lockdown needed to happen. As that lockdown began to ease into the second half of the year, we did see quite a strong economic recovery because a lot of businesses and households were clearly had been supported through the worst of the crisis, and from the business point of view were still there to provide services as the lockdown eased. So I think that's been very important, and I think appropriately, as the recovery has begun to sort of kick into gear, some of that support has begun to be withdrawn. So, for example, the tax deferrals were largely repaid by the end of the year. The standard scheme was targeted more at sectors which were still being significantly adversely affected by COVID rather than being broad-based. And more recently, SAMA has announced an extension of its deferred payment program. But my understanding is as well, they've told banks that it needs to be focused clearly on those companies that are still suffering the most from COVID. So I think that policy response has been very appropriate. And I think if you go back and look at the forecasts at the IMF, we have revised up the forecast, both the size of the contraction we overestimated in the middle of last year for 2020, and we have been revising up the growth forecast in the non-oil sector I'm talking about here for 2021. So I think that's all signs of the positive policy response. What more could be done? Well, one thing in the report we emphasise is that as the government raised the VAT rate in the middle of last year and removed the COLA allowances, it didn't provide any additional payments to low-income households through the Citizens Account Programme. I think that's something we think the government still could do. Clearly, the VAT and the COLA is a reduction in purchasing power for these low-income households. Let's say the bottom 20% of the population. So I think that's something the government could still consider. And then maybe one last point is just, clearly, the economy has done pretty well the last few quarters, but the deferred payments program is still in the early stages of being renewed, and I think, or withdrawn, I should say, not renewed. And I think it's going to be very important that SAMA and the banks keep monitoring the borrowers who've been under that program to see how they're equipped as they emerge from the COVID crisis. And one thing that we'll have to see, it's not just in Saudi, but I think in globally, how are borrowers equipped to repay banks in the post-COVID era? Thank you.
What are your forecasts for the Saudi economy? And of course, this is also given your expertise and position as IMF's mission chief in Saudi Arabia.
So, as I said, we've revised up the forecast for Saudi Arabia in the Article 4 report. But I think it's useful always, I think, when discussing the outlook in Saudi Arabia to step back and look at both the non-oil sector and then the oil sector separately, and then put it all together, because I think different forces drive each part of that, although of course there are interlinkages. I mean, so if I start on the non-oil side, I think, as I said, with the lockdown ending, we saw a strong rebound in the second half of 2020, and good growth has continued into early 2021. So on that basis, we've revised up our non-oil growth forecast for this year to 4.3%. And that's really, I think, driven both by the expectation of continued strong private consumption growth and also private investment growth. If we look across sectors now, sort of almost all of the sectors seem to be doing quite well. Of course, those that are very reliant on tourism are going to lag, given still the difficulties of travel. But generally, we've seen most sectors recover to above the levels they were in terms of GDP before the COVID crisis. And we think with employment growth continuing and unemployment coming down, still a strong drive in terms of the housing sector, PIF clearly expanding and undertaking quite a lot of investment projects, that will drive the non-oil economy. In the non-oil sector, we're expecting a small contraction still this year, minus 0.4%. So effectively, I would just say zero growth. And we base that forecast on our understanding of the latest agreed and announced OPEC Plus deal, what that means for crude oil production in Saudi Arabia. Clearly, I guess over the last week or so, there've been some uncertainties about how the agreement will move coming forward. But in the report, we've assumed the agreement continues to the end of April 2022, and that's what our forecast is based on. If we put both the non-oil and the oil together, we end up with a growth forecast for real GDP of 2.4% this year. And then looking forward, we expect that to increase somewhat over the medium term, what we define as the next 5 years, to about 2.8%. So we do expect some continued pick up in GDP growth going forward. And that is certainly partly from the expectation that the reforms that we've seen under Vision 2030, and we expect to continue to see, will have a positive impact on the growth outlook. I'll stop there. Thank you.
Thank you very much, Mr. Tim. Dr. Riyad, apart from what Mr. Tim has just said, what are your thoughts on the IMF's projections for the Saudi economy?
Well, we share similar views with the IMF. Overall, we expect a strong recovery this year compared to last year. This recovery is driven by the non-oil sector, and in particular, the private sector. The structural reforms under Vision 2030 that the government embarked since 2016 have helped the kingdom to withstand the shock from a position of strength. When we look at the fiscal side, we expect the deficit to narrow significantly from a double digit last year to a single digit and to continue to decline to achieve a balanced fiscal position. When it comes to the external sector, we expect the current account to turn into a surplus compared to last year. Also, when we look at the external position, when it comes to SAMA, foreign reserves and net foreign assets, we expect it to remain robust. Unemployment has declined significantly thanks to the government targeted measures, including through SANIT and other private sector initiatives to sustain the recovery.
Thank you very much, Dr. Riyad. Mr. Tim, we talked about forecasts, but what are the major risks that the IMF has cautioned about? And of course, what major steps that needs to be taken in this regard?
I think that's an excellent question, because I think whenever we're talking about forecasts, we have to acknowledge that there's considerable uncertainty around a forecast, even in reasonably normal economic times. But of course, we're far from normal economic, or indeed, more broadly, normal times. So there is considerable uncertainty. Let me maybe highlight a couple of short-term risks, and then maybe also sort of discuss a couple of uncertainties over the medium term. So I think in the short term, one of the clear risks is, what is the trajectory of COVID going forward, both in Saudi Arabia, but also globally as well. And we're certainly seeing, very strong and welcome progress in terms of vaccinations in a number of countries. But of course, globally, there are many countries which are still facing significant vaccine shortages as well. We're seeing new strains of COVID emerge, with the Delta variant in particular. So, we're seeing really, some countries making progress, lockdowns easing, but other countries where lockdowns are actually seem to be tightening. So I think that there's this, continued uncertainty around what the trajectory of COVID will be. And that clearly presents, I think, both risks to the global economy and also for the Saudi economy. Of course, you can't discuss Saudi Arabia without discussing risks from oil prices and the global oil market. Clearly, I think there are both upside and downside risks. Clearly, oil prices have rallied very strongly in recent months. If the global economy continues on its recovery trajectory, and OPEC Plus continues to sort of balance the market with its supply decisions, then probably prices are going to stay broadly around where they are. Of course, there are risks on both sides of that, and clearly, whichever direction oil prices go would be either an upside or a downside risk, I think, to Saudi Arabia. Longer term, let me discuss maybe briefly two uncertainties, I think. I think the first one, which we say in the report, is I think we have few examples globally of countries that are trying to quickly undertake the reforms that Saudi Arabia is undertaking. Saudi Arabia has clearly been very dependent on oil historically, and it's implementing very wide-ranging reforms to try and diversify the economy. It could well be that we've underestimated the impact of those reforms going forward. As I said in the previous answer, we have built in an expectation that growth will pick up over the medium term on those, because of those reforms. But maybe we've underestimated that because we have, little historic evidence to go on to make an assessment, a quantitative assessment of the impact of reforms. I think, the other question is, in terms of the outlook and the risks, is how does the government program in terms of sectoral economic development, big projects, large scale public sector investment, how will that affect the economy Will it crowd out private sector, or will it crowd in the private sector? And I think, of course, that if it crowds in the private sector, then again we could see upside risk to our growth forecast. If, on the other hand, it crowds out the private sector, then we might see an initial surge in growth as the investment takes place, but we may be disappointed in terms of the impact on potential growth over the medium term. So I think that's a really crucial area. How does government investment through the PIF, through the central government, through Aramco and others, how does it crowd in rather than crowd out private sector? Thank you.
Thank you very much, Mr. Tim. Dr. Riyad, there is a global debate about the risks from high inflation of consumer price index and public debt. Do you feel this is a concern to the Kingdom of Saudi Arabia?
Thank you. I will not pick a side from the global debate about inflation, but I will talk about inflation in Saudi Arabia. When you look at inflation in Saudi Arabia at this current state, it is driven by policy factors related to the VAT. Last year, the kingdom increased rightly the VAT rate to counter the fiscal challenges from lower revenues. Since July, the implementation of VAT, we've seen an increase in inflation for the period afterward. And that increase is expected to last until July to August of this year, until the base effect is over. And we expect a moderation in inflation in the Kingdom of Saudi Arabia. And I think this is in line with the IMF projections for this year inflation. When it comes to inflation in Saudi Arabia, it is very important to take into account the mandate of the central bank. We've looked at SAMA, and it has successfully implemented monetary policy and exchange rate policy over the past 3 decades. We have maintained the exchange rate peg despite of severe crises during the global financial crisis and the COVID crisis. We also maintain abundant liquidity in the banking sector, which has helped the private sector access credit without any issues. So overall, we do not see a risk on inflation. When it comes to debt level in Saudi Arabia is not that high. It is actually considered to be among the low side of the G20. Debt level to GDP is about 32% last year, and we expect it to remain moderate at that level. Also, when you look at debt in Saudi Arabia, this is the overall gross debt. But when you look at the net financial assets from the government asset at the central bank, which is extremely liquid, that will give you even a better picture about the debt situation in Saudi Arabia, which is considered to be low. Also taking into account the government efforts to advance and deepen the debt market. That has helped the government increase the debt level, to deepen the market, as well as to develop the debt market, including the sukuk market. These reforms have helped deepen our capital market, has helped us develop our debt market, and it will help us bring domestic and foreign investment into our debt instruments. Overall, we see debt as moderate in the medium to longer term in the Kingdom of Saudi Arabia.
Thank you very much. I believe we'll now look into the factors that influence Vision 2030. Dr. Riyad, what are your views on the execution of structural reforms since Vision 2030 and the development of the Saudi economy?
Thank you. In my view, before we talk about the implementation of Vision 2030 structural reforms, we have to talk about the enablers of Vision 2030. In my view, there have been a confluence of factors that led us to succeed in structural reforms implementation. Above all, a strong government ownership of reforms. We have His Royal Highness Mohammed bin Salman spearheading the structural reform agenda under Vision 2030. In my view, this has contributed a lot to the structural reform implementation in the kingdom. Another enabler of structural reform implementation has been the people of Saudi Arabia. We have a young population. More than 60% of our population is below 30 years old. This is a very young population, very dynamic and very eager to change to a more vibrant society. When it comes to the fundamentals of the Saudi Arabia, I think we have a very robust economic fundamentals. Our fiscal position is extremely strong. We have, as I mentioned earlier, a very low public debt. We have huge financial assets, including those, as Tim mentioned, managed by the PIF. We also have a very robust financial system. All of these, in my view, have contributed to the structural reform implementation. When it comes to the vision itself, it is a multifaceted vision. You have on one hand the social aspect, on the other hand you have the economic aspect. And I would like to focus on the economic aspects. From the fiscal policy standpoint, we look at fiscal policy now since the Vision 2030 launched. Now we have more transparent fiscal reporting, we have more medium-term to longer-term fiscal planning, and we have more agile fiscal management. The IMF, of course, has been a clear partner from the beginning of launching the Vision 2030. We have worked closely to enhance fiscal transparency. Saudi Arabia now is subscribing to the SDDS subscription. We also have the FSG standards of fiscal reporting. All of these have contributed to greater fiscal transparency. Of course, this is a continuous process, and our efforts will continue to enhance fiscal reporting for the benefit of all. When it comes to the financial sector, this is also a clear focus of the Vision 2030. Our financial sector has developed significantly. We have provided great reforms for the domestic and the foreign investors. When we look at the Aramco IPO, has been extremely successful. The Saudi stock market now is considered the largest in the Arab region, and it is the largest compared to a lot of emerging market economies. Also, advancing the saving channels and the investment channels. This is a clear area of Vision 2030, and we have focused a lot under the financial development program to enhance savings, to enhance investments in the financial sectors, including through fintech activities. SAMA has recently provided or licensing for new fintech companies. In our view, this will enhance the financial technology and will be a catalyst to providing more needed advancement in the financial sector. When it comes to the labor market reforms, there has been a lot of efforts from the government to make the private sector more dynamic. The expat reforms, when it comes to giving more flexibility in the kafala program, has been successful. Empowering women and enhancing access in the labor market for women, it has been a clear success. As the IMF reports have shown, labor force participation from women and females have been significantly augmented and increased on the back of the government efforts to integrate women into the labor market. When it comes to the housing market, also we have seen great strides in that sector. Mortgage loans have expanded greatly, while being cognizant of the risks from expanding credit to mortgages. Of course, we started from the low base and we do not see any risks at this stage. Home ownership has increased significantly, and this will provide social and economic benefit for the kingdom. Other structural reforms have focused on enhancing the role of the private sector to provide much needed growth for more job creation for the youth and women in the Kingdom of Saudi Arabia. The business reforms have expanded to include SMEs and the private sector overall through privatization programs, through PPP initiatives, and we expect this to continue in the period ahead, which will create more growth for the private sector. Thank you.
Thank you very much, Dr. Riyad. Mr. Tim, do you have any follow-up remarks on this, especially how Vision 2030 was portrayed in the report?
Yes, indeed. I mean, look, I think it's really important to acknowledge the and welcome the extent of the reforms that have gone on in Saudi Arabia since, say 2016. And, I could do that both, I think in terms of, looking at some of the statistics that, some of them Dr. Riyad has already mentioned, but, big increases in female participation, big increases in home ownership, a lot of development in terms of the domestic equity and debt capital markets, more bank lending going to SMEs, much more efficiency through use of digital means in government services and so on. But I could also do it at a personal level in terms of, up until COVID, I was clearly a very regular visitor to the kingdom. And, you can just see the changes on the ground. And somebody, such as me, I started visiting the kingdom in 2012, and I would never have envisaged the degree of reforms that we've seen, that you can see in terms of, more young Saudis working in the private sector, and much more dynamic government sector, lots of Saudi women working across various sectors, value-added tax introduced, energy price reforms, the introduction of the citizens account. And I know some of these reforms in terms of taxation, energy price reforms are not popular. They're never popular in any country, but I think they're really, really important in terms of the future of Saudi Arabia, strengthening the fiscal position, enabling the government to provide services to its people no matter what is happening to the oil prices. So I think these are really, really important reforms. And I think the kingdom is to be congratulated on how far it's come. Now, I think, with that, of course, and as the government recognises, there's still a long way to go. And some of the areas where I think, good progress has been made, but, more needs to be done. Clearly, one is in the fiscal area, where I think steps have been taken to improve transparency, but more needs to be done. The government's developing a sovereign asset liability management framework, so it wouldn't look only at the assets of the central government, but more broadly at the public investment fund and elsewhere, which I think is really important. And taking a broader view of the public sector and its role in the economy, I think is going to be very important. The increase in female participation in the economy has been very impressive, but I think there's still much further to go. Participation rates are still quite low compared to many other countries. And clearly, Saudi women are very well educated. They're going to be productive in the labour force. They're going to boost growth. So there's more to go there. I think in areas such as the development of new sectors, I touched on this a little bit before, and there's going to be a very careful balance that needs to be struck there. There's been a lot of, I think, reforms in terms of improving the business environment. One-stop shop for setting up a business. You can do it now very quickly. That's a big change from a few years ago. The legal framework is being strengthened. The efficiency of the port system and the transport system are being developed. These are all going to be really important for private sector development. And I think getting the role of the public sector in terms of direct investment in these sectors right is going to be a tricky challenge. There is clearly and understandably a desire for the government to, the public sector to kickstart some of these new sectors of the economy. Countries have had, I think, mixed success with that going forward. But if it's well planned, a competitive sector, then I think there's no reason why it can't work. But there's also, I think, the temptation needs to be avoided that the public sector is doing everything and then the private sector is, basically just a contractor to the public sector. So I think getting that balance right, working with that, being ambitious but not being overly ambitious, is going to be really important, and getting the right balance between reforms that improve regulations, improve incentives for the private sector relative to the public sector directly investing and intervening. That is going to be a challenge for the kingdom's government going forward. let me stop there.
Thank you very much. Perhaps we have time for a couple more questions. Maybe Dr. Riyad and Mr. Tim have mentioned this before with regards to the crowding out risks. What is your view on this?
This is a very valid concern in not only in Saudi Arabia but in other countries. But before we talk about crowding out risks, let's distinguish between two types of crowding out. There is a funding side of crowding out, and there is opportunity side of crowding out. So when it comes to funding of private sector and public sector, in the case of Saudi Arabia, we do not see any risks because we have adequate funding resources, both domestically and internationally. Our banking system is very robust to provide much needed liquidity in the system for many years to come. When it comes also to the external sector of Saudi Arabia, it is very robust. And the assets of government externally also are very sizable. So we do not see any risks from the funding side. When it comes to the opportunity of investment side, it is a very valid point because at the end of the day, you do not want to have a public sector crowding out private sectors in investment opportunities. And this is, in fact, the crux of the Vision 2030, is to enable and empower the private sector to invest and thrive. And if anything, the government is determined to catalyze private investments. We think that through the PIF, through the government initiatives, both at the legislative side to provide legislations for the private sector to thrive, as well as through the public investment fund and other public instrument, is to facilitate private investment. I think the IMF report rightly mentioned that there are certain sectors that the private sector is not keen to invest in because of the high risks. And in our view, the government entrance into these sectors will catalyze the private investments through the proper infrastructure, through the proper investments that will help create private investments and jobs for the economy. Thank you.
Thank you very much, Dr. Riyad. Mr. Tim, final question for you. What is your assessment about the performance of the banking sector during the COVID-19 pandemic?
I mean, I think that the banking sector looks to have come through the pandemic very well, which I think is, it is not a surprise because, I think one of the things we've, highlighted consistently in our previous reports is that the banking system in Saudi Arabia is profitable, well capitalized, liquid, is well supervised and regulated by SAMA. So I think it's it was in a good position to absorb the shock that came. I mean, clearly there has been an impact. Sort of the deferred payment program has had an impact on banks. NPLs have risen somewhat. I mean, of course, they remain low, but they have risen largely in the corporate sector. So those banks with more exposure to the corporate sector have seen a bigger increase in NPLs, but they remain manageable. And I think SAMA has clearly provided support both to the banks and to particularly small and medium-sized enterprises that has helped support the system. I think it's interesting, and we've clearly seen this in a number of countries, but COVID has also brought some benefits in terms of the push towards digital banking, more broadly e-commerce and so on. We clearly, as Dr. Riyad mentioned earlier, we've seen quite a push in the fintech sector, new licenses being issued by SAMA and the Capital Market Authority. So so I think there have been some benefits in terms of the the change in the business environment and business structure that have come out of this. And I think clearly digital banking for those who are have been underbanked in the past The option of digital banking is one way of getting them into the financial sector, increasing in financial inclusion and deepening. So I think there will be benefits there. But my general point is I think the banking sector is very well established, capitalized, supervised. So I don't really have any concerns in this area.
Thank you very much. I believe this concludes our dialogue. Many thanks, Dr. Riyadh and Mr. Tim, for your good remarks today. And of course, appreciate those who tuned in with us today. Wishing everyone a good day. Thank you very much.